Hi there. My name is Russ Horn, and I would like to talk to you today about a chart pattern called a pennant or a symmetrical triangle. Now, a pennant and a symmetrical triangle, the formation itself is identical. What we have is a narrowing of the market. Now, the difference between the pennant and the symmetrical triangle is how this formation starts. A pennant usually has a long introduction into the formation, something called a pole. And we're going to see an example of that right in here, right in the middle of the chart. Now, the direction of the pole usually determines the direction that the market is going to break out of the formation. So what we're seeing is a narrowing of the market, and we can see that by progressively lower highs and higher lows. The market is starting to get squeezed a little bit. So if I take a look at this image here, market moves up, and it moves up from a long ways. It moves up, makes a high, makes a low, makes a lower high, makes a higher low, and it's getting narrower and narrower. And then finally, it has to pop out. And generally, it pops out of the formation in the direction of the pole. Now, a symmetrical triangle is more neutral this way. It can pop out in either direction. And the pole of a symmetrical triangle is less obvious. Generally, there isn't one, and it's just a market that consolidates as it gets narrower and narrower, and from there, it can pop out of the formation in either direction. So let's take a look at what I've got right here, and this would be considered a pennant because we have a pole. We have this big market move up, and then a market consolidation. Now, we're not going to discover this formation right away. The market kind of has to play out a little bit, and we're going to see that it is narrowing itself. Now, if I draw a trend line across the top, I've got 1, 2, 3 areas where the price has bounced off. We only need 2, but the more the better. If I draw the same trend line underneath, we have an area, an area, an area. So we've got this narrowing of the market. Now, generally speaking, this formation is traded when the market breaks out of the trend line. We get a close above or below the trend line, and determining the length of the pole will give us an ideal target. Now, this example shows that this isn't always going to be the case. So I prefer to trade a pennant formation the same way you would trade a symmetrical triangle, and that is measuring the distance of the widest part of the triangle gives us a really good target. So once we get a breakout of the symmetrical triangle or the pennant, I like to trade as far as the widest part of that formation goes. So we're looking at a narrowing of the market, and then from there, a pop outside of the trend line, and then a continuation. And the market moves this way. It's going to move really well and then consolidate, and then move really well and then consolidate. And we're going to see this over and over. This is a repeatable formation that the market makes. And in this case, we get that narrowing as the market makes higher lows and lower highs. And then finally, once we get that consolidation wound up really tight, the market will want to explode out of that and continue, in this case, with the direction of the trend. Now, if the pole came from above into this formation, it would generally want to break below. Let's take a look at a symmetrical triangle, one that doesn't have quite this nice pole attached to it. So what we're seeing in the center of the chart is, again, a narrowing of the market in here. So if I draw a trend line underneath, I can see we've got several points of contact. I draw a trend line across the top. We've got a couple of good points of contact, and there's no clear direction that the market comes from. It makes a fairly decent move up, but then it makes a pretty good move back down, and it's still making higher highs at this point. But then from here, it starts to make a lower high. And underneath, we're making higher lows. And in this region, we are starting to get that squeeze. We're starting to get that area where the market is not able to break above its highs or break below its lows. We can draw a trend line as such. And then from there, we finally do get a break and a close below the trend line, and the market moves down. So we do have a market that moves up, and then consolidates and then moves down. But that move up isn't considerable. We're still making higher highs. So this wouldn't be technically considered a pull. We have what's called a symmetrical triangle. And that is simply just the squeezing nature of the market. And again, when the market is squeezed, it is consolidating. And eventually it's going to need to break out of that consolidation and then move in one direction or another. And these trend lines are going to give us that limit. Once we get a close or even a move beyond the trend line, we can then go for a trade in the direction it breaks out. And for this one, I want to measure the highest section of the formation, the widest part of it, and then that would become my target. Oh, got the wrong button there. So this then becomes my target. So I'm looking at the widest section in this particular one being 88 pips. So once we get the move below the trend line, the market could conceivably move 88 pips in the direction of the breakout.